A single dollar bill. Printed on paper, backed by nothing, worth less every year, and yet the entire world runs on it. But not for much longer. While you were watching trade wars on the news, $1.4 trillion vanished from America, quietly, legally, deliberately. The same institutions that built this empire are now building the next one. And history says they've done this 3 times before. If you want to understand what comes next, hit that subscribe button, turn on notifications, and stay until the very end of this investigation. Because what you're about to learn, they never wanted you to see. December 2025, look around you. Politicians scream about China. Sanctions, tariffs, tough talk on every channel. We're standing up to Beijing. America first. Bringing jobs home. Republicans say it. Democrats echo it. The entire establishment, united in manufactured outrage. But let me show you something. Between 2018 and 2020, during the absolute peak of Trump's trade war, while tariffs hit hundreds of billions in Chinese goods, while headlines exploded with anti-China rhetoric, BlackRock moved money into Chinese markets. JPMorgan moved money into Chinese markets. Goldman Sachs moved money into Chinese markets. Not millions, not billions, $1.4 trillion, that's trillion. With a T in the same years Washington declared economic war, Wall Street was funding the enemy. Now, you might think this was a coincidence. Bad timing. Poor coordination between government and finance. You'd be wrong. This was the most predictable move in the last 300 years of financial history, because there's a pattern. A pattern so precise, so mathematically inevitable, that once you see it, everything that's happening right now becomes obvious. It's a 4-stage cycle. And it has destroyed every single reserve currency in recorded history. Stage 1. Financial elites create a central bank, monopolizing the power to print money. Stage 2. They use that monopoly to finance government expansion through debt. Everything looks perfect. Economy booming. Empire growing. Everyone believes they've figured it out this time. Stage 3. The system overextends. The currency loses value. Government loses control. Cracks start appearing in the foundation. Stage 4. And this is the critical part, the part they never teach you. The same people who built the system, the same institutions that profited from its rise, move their wealth to the next rising power before the collapse becomes obvious to everyone else. The population gets left holding worthless paper. We've watched this happen in Britain. We've watched this happen in Germany. We've watched this happen in America after 1971, and it's happening again, right now. As you watch this, let's go back. Britain is at war with France. The treasury is empty. The king needs money desperately. A man named William Patterson presents a solution so brilliant, so elegant, that it would reshape the world for the next 3 centuries. Create the Bank of England. The deal is simple on paper. The bank loans the government £1.2 million at 8% interest. But the real genius isn't in the loan. It's in the mechanism. The government creates debt. The bank transforms that debt into currency, money that flows through the entire economy. And the wealthy investors who subscribe to the bank, they collect interest on the nation's entire money supply. Forever. Stage 1, complete. Within just 4 years, Britain's national debt explodes from £1.2 million to £16 million. By 1815, after financing the Napoleonic Wars through endless money printing backed by government debt, the debt reaches £885 million. The lenders didn't just profit. They owned the British government. Stage 2 kicks in immediately. Britain builds the world's most powerful navy, colonizes half the planet. The British pound becomes the global reserve currency. International trade runs on British pounds. Foreign governments hold pounds as their reserves. Everything looks unstoppable. Britain sits on top of the world. The sun never sets on the British Empire. But here's what they don't tell you in history class. By the mid-1800s, cracks start showing. British industrial production peaks, then begins declining relative to Germany and America. The cost of maintaining a global empire grows faster than Britain can afford. The debt starts climbing again. Faster, higher, unsustainable. And this is where it gets fascinating. The same financial institutions that built the British system, that created the Bank of England, that profited from the pound's dominance, start moving their money to America. British capital pours into American railroads, American steel, American industry. The Rothschild family finances American expansion, quietly, systematically, deliberately. By the time Britain officially abandons the gold standard in 1931, by the time the pound collapses as the world's reserve currency, the architects of the system have already rebuilt it. In New York, they moved the money before the collapse. Years before the public understood what was happening. Stage 4 executed perfectly. The British population held pounds as they became worthless. The British middle class watched their savings evaporate. But the financiers, they were already positioned in the next empire. Second example. Germany, after World War I, the Treaty of Versailles crushes Germany with 132 billion gold marks in reparations. Massive debt owed to the Allied powers. The Weimar government faces an impossible choice. Raise taxes to catastrophic levels to pay it or print money. They choose the printing press. The Reichsbank, Germany's central bank, starts monetizing government debt. Paying striking workers, funding social programs, keeping the fragile political coalition together. January 1923, France and Belgium occupy the Ruhr, Germany's industrial heartland, to seize coal and force payment. Germany's response? Pay rural workers to strike. Pay them with freshly printed money. The money supply goes absolutely insane. May 1923, 8.6 billion marks in circulation. June, 17 billion. August, 669 billion. November, 400 quintillion. By November 1923, $1 buys 4.2 trillion German marks. Read that again, 4.2 trillion marks, for $1. A wheelbarrow full of cash won't buy a newspaper. Workers get paid multiple times per day because their wages become worthless by the end of their shift. Prices rise during working hours. Restaurants change menu prices while you're eating. The middle class gets completely wiped out. Life savings evaporate overnight. Pensions become worthless. And here's the part they never teach you. This was an accidental policy failure. This was an incompetence. Rudolf Havenstein, the Reichsbank president, deliberately bought foreign currency with marks at any price, regardless of the inflation it caused. The government claimed this was necessary to pay reparations. British and French financial advisors said it was deliberate currency destruction. Later records confirmed it. The hyperinflation was useful. It eliminated domestic war debts. It destroyed the politically inconvenient middle class. It cleared the board. When the crisis peaked, when Germany introduced the Rentenmark in November 1923 to stop the bleeding, the solution required American loans. The Dawes Plan of 1924 brought Wall Street into Germany to restructure everything. U.S. money flooded in through the late 1920s. American banks gained massive exposure. American corporations positioned themselves in German industry. Then, when that system collapsed in the early 1930s, creating the exact conditions that brought the Nazis to power, those same American financial institutions were already positioned for the next phase. Same pattern. Different century. Central bank monetizes government debt. System expands through inflation. Currency collapses. Foreign capital restructures during the crisis. Then exits before the political disaster completes. Third example, the one that created today's system. July 1944, Bretton Woods, New Hampshire. Representatives from 44 nations gather to create a new monetary order from the ashes of World War II. The US dollar gets pegged to gold at $35 per ounce. Every other currency pegs to the dollar. Foreign central banks can redeem their dollars for physical gold at that fixed rate. The dollar becomes the global reserve currency, backed by the largest gold reserves in history, locked in Fort Knox. For 2 decades it works beautifully. Europe rebuilds. Japan rises from destruction. The dollar circulates globally. American economic dominance is total, absolute, unquestionable. But then, the United States starts using its ability to print the world's reserve currency, to finance the Vietnam War, to fund Great Society programs, to maintain Cold War military buildup. All without raising taxes. The Federal Reserve expands the money supply. Interest rates stay low. The economy keeps growing. Dollars flood into foreign central banks as America runs bigger and bigger trade deficits. By 1971, there are far more dollars circulating globally than the US has gold to back them. France sees what's happening. President Charles de Gaulle starts demanding gold for their dollars. Not paper promises. Physical gold. August 1971. President Georges Pompidou sends a French battleship to New York Harbor. They come to collect French gold. Switzerland leaves the system on August 9th. August 11th. Britain requests $3 billion in gold moved from Fort Knox to New York. Britain, the country that founded the system with the United States. The country that fought to defend their own currency. When Britain started demanding gold for dollars, everyone knew it was over. Paul Volcker, then Undersecretary of the Treasury, said later that this was the moment he realized the game was up. By August 15th, only 10,000 metric tons of gold remained in U.S. reserves. The vault was nearly empty. August 15th, 1971, Sunday evening. President Richard Nixon goes on national television. He announces the United States is temporarily suspending dollar convertibility to gold. The gold window closes. That temporary measure? Still in effect today. December 2025. The Bretton Woods system collapsed. By March 1973, the world moved to floating exchange rates. The dollar became pure fiat currency. Backed by nothing except government promise, U.S. military force, and control over global oil markets. Since that day, the dollar has lost over 98% of its value against gold. In 1971, gold was $35 per ounce. Today, it's over $3,000 per ounce. Same pattern: system overextension, loss of monetary discipline, currency debasement. So now, let's apply this exact pattern to what's happening right now. July 6, 2018, President Trump imposes the first tariffs on Chinese goods. $34 billion worth. The trade war officially begins. America's finally going to stand up to China, rebalance trade, bring manufacturing back home. Both parties support it. The establishment is united. Media coverage is wall to wall. But July 6, 2018 is significant for another reason. It's exactly 1 month after June 1, 2018, the day MSCI, the company that controls global investment indices, officially started including Chinese A-shares in its emerging markets index. Think about what this means. Really think about it. When MSCI includes a market in its indices, institutional investors who track those indices must put money into that market. Not maybe. Not if they feel like it. Must. Pension funds, sovereign wealth funds, university endowments, insurance companies. Trillions of dollars that simply follow the index automatically. China's weight in the MSCI Emerging Markets Index went from essentially 0 to 43% by October 2020. During the exact same period, 2018 through 2020, U.S. portfolio investment in China hit $1.4 trillion. The peak year? The trade war at its absolute hottest. BlackRock expanded its Chinese operations throughout this entire period. JPMorgan got approval for a majority-owned securities business in China. Goldman Sachs increased its stake in its Chinese joint venture. These aren't accidents. These aren't coincidences. These aren't timing issues. These are the same institutional structures that operated through Britain in the 1800s, through Germany in the 1920s, through post-war America in the 1970s, and they're executing stage 4 right now, in front of your eyes, while you watch political theater on television. Let's check the boxes. U.S. national debt, $36 trillion. Debt to GDP ratio, 98%. The Federal Reserve's balance sheet was under $1 trillion in 2008. It exploded to $9 trillion during COVID. Still above $7 trillion in December 2025. Same mechanism as always. Central bank monetizes government debt. Government spends far beyond what taxes can cover. Currency supply expands way beyond the economy's productive capacity. And the financial institutions that run this process start moving capital to the next power center. Stage 1. Federal Reserve established 1913. Monopoly on money creation achieved. Stage 2. Decades of debt monetization. Financing wars globally. Financing programs domestically. Stage 3. System overextended. Debt at 98% of GDP. Currency debasing. Stage 4. Financial institutions moving capital to China, while Washington performs theater. We are here. Right now. The pattern does not care about your political preferences. It does not care whether you believe in American exceptionalism. It does not care about technology saving us. It does not care about modern monetary theory. It does not care about any intellectual framework designed to explain why this time is different. This time is not different. The mechanism is mathematical. When a monetary system is based on debt creation, when the entity that creates money is separate from, but dependent on the entity that taxes. When the system expands beyond productive capacity, the currency debases. Period. And when the currency that debases is the global reserve currency, the architects of that system move their capital before the collapse completes. Every single time. Here's what people miss. The trade war was theater. It was designed to fail. Or more precisely, it was designed to appear as if America was resisting, while the actual financial integration accelerated behind the curtain. You cannot fight China with tariffs, while your largest financial institutions are moving record amounts of capital into Chinese markets. You cannot reshore manufacturing, while the index providers who control institutional capital allocation are increasing China's weight in global portfolios. You cannot maintain dollar hegemony while running trillion-dollar deficits financed by central bank money printing. The contradiction is not an accident. It is the mechanism. The British population did not understand in 1880 that their capital was building America. They thought Britain was still the dominant empire. They believed the pound would reign forever. They were wrong. The German population did not understand in 1929 that American banks had facilitated their hyperinflation cycle. They thought it was bad policy. They thought it was incompetence. They were wrong. The American population does not understand now, in December 2025, that Wall Street is building China's financial infrastructure while Washington performs resistance. They think it's about trade deficits. They think it's about manufacturing jobs. They think tariffs will fix it. They're wrong. But the pattern does not require your understanding. It simply executes mathematical, inevitable, precise. So what do you do with this information? You understand that the machine is already in motion. You understand that by the time this becomes obvious to the mainstream, the repositioning will already be complete. The wealthy will have moved. The institutions will have exited. And the population will be left holding devaluing currency. You understand that the current system, the dollar as reserve currency, American financial dominance, the post-Bretton Woods order, is not permanent. It is stage 3 of a 4-stage pattern. And stage 4 is executing right now. You position yourself accordingly. You understand that holding assets denominated purely in a debasing currency is a choice to participate in the wealth transfer mechanism. You are choosing to be on the losing side. You understand that the inflation is not temporary, not transitory, not the result of supply chain disruptions. It is the predictable, inevitable mathematical outcome of monetary expansion disconnected from productive growth. When they print more money than the economy produces in real goods and services, prices rise. Always. Without exception. And you understand that when they tell you not to worry, when they say this time is different, when they claim modern financial engineering has solved the problems that destroyed previous systems, they are either ignorant of the pattern or complicit in its execution. You understand that the next 5 to 10 years will not look like the last 30. The mechanism is accelerating. The debt cannot be repaid. Not with taxes. Not with economic growth. Not with any politically feasible solution. The currency will continue to debase. The purchasing power of your dollar will continue to decline. The financial elite are already positioned. They've moved $1.4 trillion already. That's just what we can track. The only question is whether you understand the pattern clearly enough to see it happening in real time and make decisions that account for the inevitable outcome. This is not prediction. This is pattern recognition. The same mechanism that moved British capital to America in the 19th century. The same mechanism that moved American capital into Weimar Germany before the collapse. The same mechanism that moved capital out of the United States as Bretton Woods failed is moving capital into China right now. While politicians argue about tariffs. While think tanks debate decoupling strategies. While the media obsesses over trade war optics. Wall Street has already decided. $1.4 trillion has already moved. And the pattern, which has never failed to complete itself in 300 years, is 3/4 through its execution. If you want to understand what happens next, if you want to know how the final stage of this pattern completes, if you want to see how the transition from American to Chinese financial dominance finalizes, you need to understand how the machine was built. You need to see the institutional architecture that makes this transfer possible. The Federal Reserve, the World Bank, the International Monetary Fund, the Bank for International Settlements, MSCI and index providers. Central banks coordinating globally. And you need to recognize that every historical parallel points to the same outcome. The population holds the currency as it approaches zero. while the architects of the system have already moved their wealth to the next power center. That is the pattern. That is the mechanism. And that is what is happening right now in December 2025, while everyone watches political theater and misses the systematic wealth transfer occurring behind it. The British didn't see it until it was too late. The Germans didn't see it until their savings were worthless. The question is, will you see it? Or will you be one of the millions who realizes the truth only after the collapse is complete, only after the wealth has transferred, only after the new system is already built? Because it is arriving. The pattern has never failed. Not once. In 300 years. And unlike every time before, this time you have the opportunity to see it while it's still executing, rather than understanding it only after everything has collapsed. The choice is yours. The information is in front of you, the pattern is clear. What you do with it determines which side of the wealth transfer you end up on.